Great. So welcome to everyone. I'm excited to have you here. Happy Monday. Today we're going to be talking a little bit about what's going on in the market, what occurred last week, and also some important tips to help you make sure that you are a better investor. And I'm really excited to have my colleague here, Natalie. Natalie, do you want to say hello?
Good morning, everyone. Excited to be here. Happy Monday.
Great. We're excited to be here. We've got some great information to go through for you. And I want to let you know that the format going forward is going to be a little bit shorter and sweeter with more power punch. What we've spent over the last couple weeks is giving you very broad, deep information to make sure that you have the foundation to bring you to the point where we are today. Really important for you to understand what's going on overall with the economy as well as with the markets, and we've been able to do that. And so we're going to be focusing on really important, detailed, direct information that we're going to be going through today that's going to be very helpful for you. So our goal is to do this within 20-25 minutes. The past presentations have been up to 45, 50, even an hour. Granted, lots of information in them and very important. So if you want more of the foundation, also we have specific presentations that focused primarily for businesses, for the Paycheck Protection Program and the emergency loans. We've got all that. So feel free to reach out to us. We can send you a recording and make sure that you've got that important data. So we're going to go ahead and get started. Natalie and I have been working together for years. She's one of our amazing associates here at Francis Financial. Many of you know her too because you get to work with her on her team and are very, very fortunate. So I'm going to go ahead and go just to really quickly the agenda to tell you a little bit about the things that we're going to be doing today and going over, and then Natalie's going to kick it off. And so she'll be talking a little bit about last week's presentation. We focused a lot on are we in a recession? If so, what does the recovery going to look like? This week, we're going to be diving into some new subjects, something that's really important that we're seeing with a lot of individuals out there, what's called crisis fatigue. And we're going to be talking about that, how that impacts our brains, in particular what we call the amygdala hijack, and then also some self-care tips and some questions at the end. So we'll go ahead and get started. And Natalie, do you want to take it away?
Absolutely. Thank you, Stacy. And before we do jump into the recap and everything, as a reminder, there is a chat box feature at the bottom of the screen. Feel free to enter any questions you may have during the presentation down there, and we'll be sure to catch those at the end. Stacy, yeah, thank you. So last week's presentation was really interesting. Started out by touching on the immense popularity of the Paycheck Protection Program, the PPP, that was part of the CARES Act that was passed 3 weeks ago. And in fact, the PPP was so immensely popular that many banks ran out of funding in a matter of days. And so there's been discussion last week of Congress pushing through an additional $250 billion in additional relief for that program. In fact, yesterday, Mnuchin came out and said they're very close to reaching a deal. We may see that today. And that's been increased to $300 billion additional relief for the PPP, in addition to some more support. Last week, they also talked about the comparison between what we're seeing right now and 2008 and 2009, that financial crisis. And it talked about the different underlying risks that we saw back then, primarily liquidity, individuals getting enough access to funds to stay afloat, to not lose their homes, and also capital problems. So companies being uncertain about the future and being hesitant to make any investments, hire new people. So those were two really big problems, particularly that the US faced, that really slowed our economic recovery. And not, what I found was interesting actually was that not every country faced these same two problems to the same degree. And the degree to which they faced these two problems really spoke to how quick their recovery was. And going forward, our government's ability to get these stimulus packages out there and to successfully support people who are facing significant challenges right now will really say how quickly we're able to pull ourselves out of this economy. And that's the U-shape recession, which could take a little bit longer to come back, versus the V-shape recovery, which is really sharp decline, but a really sharp recovery as well. So that V-shape recovery would be ideally what we would want to see going forward. So the last week, there seems to be new news on a week-to-week basis, and we saw some not unexpected news, but still, not great. And we also saw some silver linings here. So first, the International Monetary Fund came out and said that they expect the world economy to contract by 3% in 2020. That's pretty severe. In 2009, the worst year of the last recession, the world economy contracted by about 0.1%. So quite a much more severe contraction than what we saw in 2008, 2009. The silver lining is that the IMF also expects the world economy to rebound in 2021. So that would suggest that, yes, this is having a pretty severe impact at the moment, but we should see a pretty dramatic increase in productivity and economic growth thereafter, shortly after. Global trade, unfortunately, it was already hurt by tariffs that the U.S. put in place, particularly against China. That's expected to just fall drastically further because of the crisis we're seeing right now. The IMF and the World Bank, though, are leading a push for the wealthier nations to suspend debt payments from low-income countries. And this is something new we're seeing, is more of this push for a global, interconnected, working together to get the entire world economy out of this recession. And the Group of Seven, which is the 7 largest countries largest economies in the world, have already signed on to this, as well, or as long as the G20 countries all sign on to it as well. So this could really help those smaller emerging countries dig themselves out of this economic rut as well. The narrative has shifted, which is a silver lining. This is good news, from let's flatten the curve to what can we do to reopen the economy and get things going again. And so President Trump discussed reopening the economy with business executives. Everybody is on board that we need way more testing than what we're seeing right now. People aren't going to feel comfortable leaving their homes until they are certain that their neighbors, that the person sitting next to them in the cafe is not going to possibly give them this virus. And so we seem to have at least the next step forward to make progress here, which is how do we focus on increasing testing across the U.S. so that we can then safely start opening the economy, and so that people can feel comfortable going to work again and going out to eat and going shopping. So changing the narrative there.
It was interesting, Nellie. I was watching the news and reading Germany is doing quite a bit of testing, and they're doing testing not only for, do you have the virus now, for diagnosing, but also for seeing if you have the antibodies. And they're going to be doing 3,000 random tests to get a better handle on how pervasive is this and how many people it's affected in their country. And that will also help us understand spreading patterns. It will help us understand what the true mortality is, because it's interesting, a friend of mine got tested. She didn't know she had it, nor did her husband, and they had the antibodies. So it's very clear that they had the virus, but they had no symptoms. So
oh, wow.
It's interesting for us to see, how has this really incorporated into our lives? And I am 100% confident that there are going to be people who didn't realize that they had the virus, that they end up with the antibodies. So the testing, I agree with you, that's going to be really important. I understand wanting to open the economy as quickly as possible. I mean, I will tell you that like being homebound is not easy. But I agree with you that people want to make sure that it's safe, and that there isn't going to be a resurgence of the virus too by opening the economy, because we've seen that happen somewhat in Singapore. So yeah,
Mhm.
and now there's been kind of an effort between the states on the Northeast. Um, what is that all about as far as the reopening?
Yeah, this is also, good news. What we're seeing now is, again, not something we've traditionally seen in the past, which is a lot of different states, different areas, different countries really trying to work together on this thing. And this can only be positive for getting us out of where we are right now. So New York, New Jersey, Pennsylvania, Delaware, Rhode Island, and Connecticut, 7 states in the Northeast, have agreed to work together to slowly reopen all of their economies at once over time to stop the virus. And they acknowledge that if one state opens their economy, well, we're all so close and we're all so small here in the Northeast that likely someone living in Connecticut is going to be commuting into New York for work, and vice versa. It's just not going to work unless all these states work together in unison to slowly reopen the economy. It's really smart, makes a lot of sense. I know I'm originally from the West Coast, so you have 3 states along the entire West Coast. That is not the case here on the East Coast at all. So some level of partnership and working together is absolutely going to be necessary. And it's also good news because the East Coast seems to be the epicenter, New York in particular. And the idea that now we're shifting the focus to what can we do to reopen the economy is really a breath of fresh air, because for so many weeks, the death toll was mounting, the number of hospitalizations was increasing. It was really scary, and it's still scary, but it's nice to see that we're shifting the focus to, okay, it seems like we're getting on top of this thing. Now, how do we safely reopen?
Yeah.
So this is good news.
Yeah. And that actually goes into a topic called crisis fatigue. And this is really back to the investing piece. I am going to be completely vulnerable and share that I have suffered from this myself. And what crisis fatigue is when you are being bombarded by all of this very negative news. Um, and you turn on the TV, you turn on the 5 o'clock news, and it's just like gut punches. And what I find, whether it's CNBC or wherever, or even looking on my phone, by the time I put it down, my level of anxiety has gone up 2, 3, 4 times what it was before I started looking at the news. And I noticed this about myself, that the more news I watched, the less mental capacity I had. And, the tiredness that really goes along with it. And, I liken it to dealing with a personal traumatic, and we've all dealt with something in our lives that have been traumatic, whether it's losing someone or it's having something awful happen. I know when my mom passed away, my ability to mentally process and be 100% on top of things was drastically reduced. I mean, I tried my hardest, but I couldn't think straight. I was tired, and that's what's happening right now. And the challenge that we have is, number one, realizing that, but number two, making a change. What's happening is that when you have danger, which, watching CNN, CNBC feels like there's danger out there because you could potentially lose money. And the loss of money, we'll talk about this, is one of the most frightening things that we can go through. That's one of the most emotionally charged things that we can experience. That is all processed in what's called the amygdala. And the amygdala is back to our ancestors, the cavemen of the fight or flight, were mortal danger. So losses in our portfolio are processed in the exact same place where we process mortal danger. And the challenge is that when we have what we call the amygdala hijack, where the only part of our brain that is functioning is the fight or flight right here, what ends up happening is it turns off to everywhere else. And the prefrontal cortex, you can see right here, the prefrontal cortex is that very important emotional, rational, long-term decision making. So the kind of the smarts of the brain saying, okay, everything's going to be fine. Let's not overreact. Let's not sell our portfolio. What ends up happening, and I feel like this is a really good slide here, the brain waves that normally go between the prefrontal cortex and the amygdala on the left is pretty nice flowing traffic, but once that amygdala is stimulated, and that's the thing that essentially takes over, that communication between the two parts of your brain locks up into a traffic jam like you can see here.
And I love this picture, Stacey,
Yeah, because this is California. Is this California?
It has to be. I mean, it looks so much like my old
looking at it, I was like,
commute.
this is probably the traffic because how many other places in the world, I mean, California is the only place I've been where it's like a 6-lane highway and it's crowded.
I know.
It's
the traffic is
shocking.
so bad. I mean, I just love not driving out here. But when I look at the picture on the right, I feel that sense of that instant, like sweaty palms, and my heart starts racing.
Yeah.
And I get aggravated. And I feel like just looking at that picture gives me an amygdala response.
And you don't even have to watch the news. Yeah. So anyways, why don't you take over? Because I know that you're going to talk a little bit about the hijack and how this impacts our decisions. And we'll talk a little bit about how to avoid it.
Yeah. And if you notice, the amygdala, that's the number 2 right there, that's highlighted green in the picture. It's really at the core of the brain. And I've read a few books on psychology and how the brain developed over time. And what's interesting is the amygdala, because it's that fight or flight response to mortal danger, it was one of the very first pieces of the human brain that evolved. And so over time, the prefrontal cortex, that ability to think about the future and to think about planning and executive functions, that's one of the most recent evolutionary developments in the brain for humans. And in fact, for children, it doesn't even fully develop until age 25. And that's a lot of the reason why you can't rent a car until you're 25, why insurance is really expensive when you have an 18, 19, 20-year-old driving, is because the prefrontal cortex, that decision-making feature, is not fully developed. So if you think about your brain under an amygdala hijack, it's pretty much the equivalent of a toddler having a tantrum in Whole Foods. It's just not rational. It's not rational. And the problem is that's the place we go to, that toddler, irrational toddler, whenever we're told that we're losing money, which happens all the time on TV, in the news, especially during periods like this. And even just expecting that loss will activate the amygdala, activate that hijack, and that primes your brain. Not only does it turn off the prefrontal cortex like that traffic picture, it primes the brain for completely unhealthy, biased decision making. So walk us through some of what those biases look like.
Yeah, so we did some research, and the 5 most significant behavioral biases that affect investors is recency bias, loss aversion, and confirmation bias. And we'll walk a little bit more through some of these more relevant ones, and how to make sure that you're not being a victim. And so the first one is recency bias. And I put this as first because it's something that we're dealing with right now. The fundamentals for long-term investing have not changed. We know that long-term, the markets return on average 8%, 9% a year. In some years, much greater, like we saw last year, 30% returns. And then other years where we're seeing, like this year, where we're actually at a loss. But the recency bias, the challenge is that all of that data, that logical data of, the market goes up essentially 2 out of 3 years. The fact that on average since 1930, the market's been up about 8% a year. We know that, but the recency bias of seeing the market and stocks drop is what drives our decisions. And so what we're seeing is individuals trying to essentially time the market and pull money out. And they're pulling money out because they are seeing the news on the news on TV. They're seeing negative news about the virus. And even though they have all this logical piece of trying to, and all that data and historical data, they're not able to grasp it, believe it, because of the recency bias. They're so tuned into what's going around them right now, recently. So that's one to really watch out for, and not let your decisions of your long-term investing be impacted by what's going on hour to hour or day to day. The next one is loss aversion. And, Natalie, you definitely touched on this, that losses have a very significant impact on individuals. In fact, they've done studies and they found that the intensity of essentially earning $10, that intensity of getting that $10. Let's say you went to the casino and you won $10. That $10 doesn't feel as good, and that response is not as positive as the loss of $10, meaning that someone who loses $10 feels disproportionately worse in the intensity of their emotion than someone who wins $10. So that can be a problem. And here's a good example of how this really plays out. In decision one, you're guaranteed $900 or a 90% chance of $1,000 or a 10% chance of zero. What ends up happening is that individuals end up choosing A, the guaranteed 900. Why not B? Because B represents a risk, and they don't want to have that risk, so they'll choose A. Now, where decision two, if there's a 90% chance of losing 1,000 or a guaranteed loss of 900, people are going to choose B, because at least there's a chance of not losing anything. So even though the statistics on all of these are exactly the same, we find ourselves focusing on choosing certain things, essentially avoiding risk. That's what we try to do, and what we call loss aversion. An anchoring bias. So this is the final one I'll talk about, but this is a big problem that we are focused on, and that is we anchor to a certain, let's say, index. And for the majority of people, it's the S&P 500. And we watch the S&P 500, we see it on the news, S&P 500 up this amount or down this amount, and we anchor to that. But the challenge is that clients, individuals, are not invested in just solely the S&P 500. So while we anchor to that performance of the S&P 500, we're anchoring to the wrong information, because I don't know any investor who is in 100% stocks. And if they are, bless them, I'm not sure what age they are. Even my children are not 100% in stocks. So making sure that what you're anchoring to, your reference point of how you're performing, is an appropriate reference point. So these are just some very, kind of most popular ones that we see that unfortunately cause us sometimes to be self-sabotagers and making poor decisions with our investment performance.
And I love how you ended that with making poor decisions about our investment performance. So this is a fantastic quote. In the end, and I'm just going to go to the last sentence right away, but it says, in the end, what matters is the quality of our decisions in the face of uncertainty, because we're never going to be able to know for sure what the future holds. So the quality of those decisions. So how do we improve the quality of those decisions? Well, it turns out that our brains are, even when they're not under the amygdala hijack, they're not that great at piecing together long-term trends and multiple variables. And these are the exact skills that you need to be a successful investor in the first place. So the first step when you're thinking about overcoming crisis fatigue and the amygdala hijack features is awareness. It's really understanding that this is what happens when we're in this kind of scenario and environment. The second is to identify what triggers it. And again, that could just be the umbrella of, here we are in this environment, this situation, the news is ongoing, we're stuck in our homes. Obviously, our lives are very different today than they look like 3 months ago. But checking in on the news on a daily basis really just heightens that amygdala hijack. It's not a positive thing to be staying on top of the news on a regular basis. The news by its very nature is meant to be emotionally triggering. That's how they get you to tune in. So check in only when necessary. And I would even suggest choosing 1, 2 sources of news that you follow. So maybe it's this Monday morning webinar that you use to check in and get the pulse of what's going on. Maybe it's another very reliable news source. Don't simply go on CNN, MSN, Fox News and digest everything that they have there, because that will only trigger this hijack response. And then maintain your perception of control, and the best way to do that is to outsource. Whether that's working with a financial advisor, putting a plan in place in advance, or whether that's leveraging technology. Automate. Technology is amazing at helping us overcome our own failings, and you can automate dollar cost average into your portfolio over a long period of time, automatically rebalance your portfolio so that you don't even actually need to be making these investment decisions on a month-by-month basis. You can set it and forget it. That's going to be the key to overcoming this hijack response. And, the prefrontal cortex, again, the CEO of the brain, how do we get into the habit of trying to flex that more? And the answer is really going to be to plan in advance. If you are working with an advisor, think of your financial plan as a ship that you put together in a nice, calm harbor when the sun was shining. I always picture San Diego, and you built this wonderful seaworthy ship in the harbor, and you planned for all the inevitabilities you were going to see out at sea, and then you set sail, and now you're in the middle of a storm. Well, you built this ship knowing with certainty that you are going to be in a storm. When you're in the middle of the storm, that's not when you start making changes to your ship. You trust that the plan you put in place, the ship you built in the harbor, will withstand the storm. And you trust that the storm will pass and you will be in sunshiny days again. And that's how you should be, thinking about your portfolio, your financial plan. You can't control the market, what's going on outside. You can't control personally the virus. What you can control is your response to it. And think about, your cash flow, what you need to do to get by day to day. Try to let go of the things that you can't control and trust the plan.
You make a great point. We last summer we went out and a good wind gust storm came in, and needless to say, I mean, we were just hanging on. There was going to be no way that we were going to be changing our boat. It was just, we're going to be getting through this and hang on and make sure everybody has their life jackets on. And you know, making sure that your ship is as robust as possible so that when you do have storms, and really, again, making sure that you have the right mixture of stocks and bonds, because it's those bonds that are going to, essentially carry you through the storm and make it less wavy, and hopefully not get seasick. So really important. And self-care, and I'm just going to say too, this is something that I'm working on very much so. And we have put in place a really wonderful virtual workout class every week on Thursdays at 5:30. And it's really important for all of us to keep moving, to take care of ourselves. And so this Thursday, we're going to have Dr. Laura Miranda. I actually worked out with her virtually this morning. She's fantastic. I feel great today. And then the week after that, we're going to have yoga. So feel free to give us a call or shoot us an email. We can send you the Zoom link. It's also right here too. We'd love to have you come. It's just a great way to get your body moving and keep thinking positive. So we'll go ahead and see if we have any questions.
And I did see that one came in, Stacy, and I think that you will probably have some thoughts on this.
Yep.
Someone applied for the PPP program quite a while ago and hasn't heard anything, doesn't know how to check the status. Have you been hearing, how quickly people are hearing back about this program, whether or not they were approved, and if not, how one might get an update?
So the Paycheck Protection Program, there is something that you actually apply through your bank. And what this person is talking about is the economic injury disaster loan. Even though they put PPP, I think they might have mistaken that. The economic injury disaster loan is different. It's not through a bank. It's something that you would do directly through the SBA website. And you can get a loan for up to, I think, about $2 million. However, the piece that's special about it is that the first $10,000 that you apply for is essentially a grant that is given to you, and you do not have to pay it back. The information that we are getting about this loan is essentially that the SBA is unbelievably backed up. We do have a client that applied for this the first day it came out, and she has received the 10,000, but it sounds like you were maybe a couple days after. So what I would say is that it's probably going to take another week or two. The SBA is definitely backed up. Not only are they processing the economic injury disaster loans, which is that free $10,000, but also the Paycheck Protection Program. While the Paycheck Protection Program is being administered through banks such as Chase, Wells Fargo, and others, the SBA still has to put the stamp of approval on. And that, people who applied the first day still don't have that money either. So ultimately, it's going to take a little bit more time for you to receive that. It's the same thing also with the stimulus checks that are going out. It's $1,200 per person if you're married, $2,400. If you have children, it's $500. If they are a dependent on you, it's $500 per child. There are some AGI limits. So for example, if you make over $75,000 and you are single, your benefit is going to start to be reduced. That number is doubled essentially for a married couple. These two are taking longer to get out as well. And we're also starting to see that the unemployment claims, some people are getting through. And I do want to mention that because that it feels if you call that it's a zero-sum game and that there's just no way you're going to be able to get through. The challenge with unemployment is that you can do everything online, but for you to actually get approved, you have to have a voice-to-voice conversation. What I have to say is that you should reach out and continue to reach out, and eventually you will get through. The SBA also, you will get through. I've had a client give a call. She ended up doing her laundry, ended up doing dishes. It took about an hour. She just was on hold and finally got through, and they were extremely helpful. Now, know also with the Paycheck Protection Program, I'm going to do just a quick recap of that so that you understand what that is. So you get a loan up to 2.5 times your payroll. And when I say payroll, payroll includes paychecks that you give to others, not who you pay 1099. You can't add the people you pay 1099. So only people who are on payroll, their retirement benefits, their health insurance benefits, as well as state and local taxes that you might pay on their behalf. That is the amount of the loan that you are eligible for, and that's how you calculate it. You do not necessarily have to show financial need to be able to be approved, but of course, you should have need. And unfortunately, I have seen one person I just ran into, if you can believe it, their revenues have increased in this time, and they've actually applied. That's not smart, that's not ethical, and that should not be happening. Now, with the economic injury disaster loan, where that first $10,000 is essentially yours free and forgiven, you do have to show need. So you can apply for up to 10,000. You may not get 10,000 free of charge, but you have to submit with their P&L of this time period versus P&L of last year to show that there's been a significant drop in your revenue and that you have been very much economically hurt. So this is really important to understand the difference between the two. And what I would say is go back and listen to the webinar that we gave essentially 2 weeks ago because it takes you through all of this, and it's not easy. I have spent about 80 hours eating this stuff for breakfast and learning it. But what's great about that webinar is that you're going to have a full lay of the land and understand. What I would say, because I know that we want to finish up sooner than later here in the next 2 minutes, is that if you know someone who has not applied for the Paycheck Protection Program or the Economic Injury Disaster Loan and their business has been negatively impacted, have them apply. Some banks are not taking applications, but others are. Make sure that they're ready to be able to do that, because when that 250 billion or potentially 300 billion, Natalie, that you talked a little bit about earlier, gets approved by Congress, the coffers are going to open again, and you want to make sure that you get in on this round, because I'm very doubtful that there would be a third round. I'd be very doubtful. So, but reach out to us if anyone has any additional questions. Feel free to reach out to us. We love what we do, and the best part of our work is being able to help. I think something that is so true of Natalie and I is that we are helpers. We are helpers, and being able to be here and help individuals is also what's really helping us get through this very difficult time. And so I also share that the best way to get through this is to try and help others. And so whether that's baking cookies for your doorman, or it's helping a friend who's a shut-in who doesn't have food, or screaming out your window at 7 o'clock to say thank you to the amazing people who are putting their lives on the line to deliver us food, to be in the hospitals for all of that. The more you can do to help others, the better that we're going to be able to go through this. So Natalie, thank you so much for being here, and thank you for everybody for tuning in. We'll record this, and we also will send it out by tomorrow at the very latest so you can share it with any friends and family. So thank you so much, guys. Bye-bye.
Bye.